Hi everyone and welcome back, and in this video we're gonna explore absolutely the most important questions you need to ask yourself when investing in the stock market. So I think we should dive right into it. What do you think? So the first question we need to ask ourselves before investing in the stock market is, what are the assets you're investing into? That's the absolute first question. So what are you gonna do, right? Well, most people do what I did in the beginning. I went on the forum, Facebook groups, and they said, yeah, I invest into this company, it's new, it's a biotech, it's gonna go up 1 billion%. That's exciting, isn't it? And there's over 8,000 stocks out there, at least in the US. How are we gonna choose all that, right? So we have found a sweet spot, basically. So we don't want to invest in the entire market. It doesn't move enough. You might have seen the headlines, oh, the stock market is crashing 2%. It's like 2%, and on average the market goes up 7-8% a year, and now with inflation it doesn't even cover that. So we want to make sure it moves a little bit more, but not too much. So if we look at, for example, IPOs, that's initial public offerings. That is when stocks are brand new and they're coming into the market. Well, if you invest into one of those, it's kind of a 50-50. They could go good, they could also tumble over. So a little less money in that one. Thank you very much. And it can also take a lot of time before they launch. And if you're investing into a public company, which is a company that's been on the stock market for maybe a few months to years, they're not very certain, are they? They can go down a lot, they can go up a lot. So we want to invest in the sweet spot, not the big market, but not either the new companies. And that's the new companies, that's the area where most people are, or in the market. The people that are very conservative, they keep their money in the market, get an average of 7-8% a year, while the majority that are retail investors, you and me retail, they invest into startups and public companies. And what happens is that they actually end up losing all of their money. Usually. There are of course exceptions. So we want to find the sweet spot, which is in the middle. We want to invest into blue chip companies. Silver and gold cannot go to zero, and that's the question we need to ask. Can the asset go to zero? And if the answer is no, in the next 1-2 years, then I would be happy investing in it. And if you say, well, I don't really know, well, that's a no, right? Either it's a yes or it's a, well, then it's a no. For that reason, we want to invest into blue chip companies. You know them. It's Google, it's Facebook, it's Johnson & Johnson, it's Walmart. Apple is another one, right? You could probably name 10 yourself. And then gold and silver, of course, as well. That would be the asset class we're investing into, or the assets. You need to find out what the beep you're doing, right? You need to know that before. You don't just go, I'm going to pick this one because the name sounds cool. You can't do that. And then the next piece here, the question you need to ask yourself before you invest in stocks is also, what strategy am I using? The simplest way to do this is just to use the DCA strategy. That's the dollar cost average strategy, which means you're having a chunk of money and you invest maybe the same amount monthly. Most of you do this in your pension funds, I think. So every month, put a little bit in. No matter if the market is high or low, you get an average price. And you can, of course, use better strategies than that. We use the VCA strategy. We find the high and then we invest as the market goes lower. And we choose our portfolio really carefully and really look at the fundamentals of the companies. So we really make sure we invest in the best and top ones. So that's the second one. You need to have a strategy when you do this that really answers the questions. When you're going to invest, how much money you're going to invest with. So what's your risk? And then when you're going to sell with a profit, when you're going to enter, and when you're going to sell with a loss. You need to answer all of those questions before you start investing in it as well. And in no particular order really, but this is the third question you need to ask. What platform should you be using? And most people here, they're actually using platforms that are scams, right? So make sure you use the biggest ones in your country. Is Google the best stock exchanges in your country, and the name of your country. So if you find someone that calls you, I don't know if you've got this, I get this all the time. Hey, I'm calling from financial markets. And do you want to invest into cryptos? You showed interest or stocks even, and they can invest for you. They trade for you. And the problem with that is that usually that is a scam. It's not regulated. So write this down. The platform you're using, the broker you're using needs to be regulated. And just to mention a few, IG Markets, Interactive Brokers, we have Avanza, we have Nordnet, there's so many different ones, right? Robo Markets we're using, eToro. So just make sure they're regulated. Google the name of the broker and ask if it's regulated. And then I'm going to add a bonus one for you here today as well. The bonus one is make sure you have an education. Make sure you have an education so you learn how to do it. That's another question that you need to ask yourself, right? So if you don't have an education and don't really know what to do, are you going to do mistakes? Will it take a longer time for you? And in that as well, ask, what time frame do you have? We don't have 300 years to live. So if your time frame is that you need to learn this now, right, to make this a second pillar of income, then make sure that you choose an education that can take you there as fast as possible. The other question you need to ask yourself is, how much do you want to make? I'm happy with 7% a year. Great, then do DCA. No, actually, Dennis, I want to make like you, 4.53% a year, which we have a video on that I show you how I do that. Then you need other strategies. If you want to make 10% a month instead, so 4.53% per month, which is 50-60% per year compounded. If you, for example, want to make 20% per year, right? Or maybe more, 10% a month. They need to have strategies for that as well, which is where education becomes very handy. So if you want to find out for yourself and do the calculations over a 15-year period of how much you can make to create a plan, we actually have a site for you can go to. It's investment-mastery.com/compounding. So I hope we can get the link up here so you can really calculate for yourself and create a plan for you. So those would be the questions you can ask yourself. So I hope you really enjoyed this video, and don't forget to subscribe to the channel if you like this type of content, like the video, and don't forget to press that alarm bell in order to make sure you get notifications so we know how we can support you in the best way and you get the videos as soon as they're coming out. So with that being said, from myself and our whole team, of course, we want to support you. We love to see you here and really thank you for your time, and we cannot wait to see you in the next video.